Good morning, everybody. It's Brian. Getting started a little early, I guess. Didn't realize it was still 15 minutes to 7, 15 till 8 Eastern time. Anyway, since I went ahead and clicked the button, I guess I'll go ahead and get started. So, hope you guys are having a great day today. Just going to run through what's happening, kind of what we're looking at, what we're setting up for in the futures market and forex. And then we'll roll on from there. I haven't hit crypto in a while, but it continues to push stronger. Cryptos, ETH's up around 382. Bitcoin's in 11,470. So both are quite a bit beyond what they're kind of some key levels that we want to watch. With that said, though, there's some unrest in other markets right now, and I think if our indexes start to take a dump, potentially we could see Bitcoin and ETH dump as well, which sounds kind of counterintuitive, but I think there might be a pullback there before anything else happens. Anyway, let's go ahead and run through the numbers and talk about what we're seeing as we come into the day, and then we'll go from there. So, kicking things off with the let's start over here. So, kicking things. Why is my screen updating? Seems to be a lag. I don't know why my screen sharing doesn't seem to be sharing the right thing here. So, if I flip over, well, hang on a sec. Technical difficulties this morning. It looks like it's not actually showing me what it should be showing me here. So we're gonna see if we can't reset this stuff. So let's do this. All right. That looks like it might be working a little better now. All right, so big things this morning. We do have, we do have some news that'll happen prior to the regular trading hours starting, and that's the core CPI report that comes out here, which is a U.S. report, and these are high impact reports. I mean, this is the basic. Well, it tells you right here is the consumer prices. So this gives us an idea of the cost of consumer goods, and as it weighs into everything else, it could potentially be a factor for us as we look at the overall markets. As I mentioned before, there seems to be a little heavier sentiment in the market as we go over and look at what's happening out here in the indexes, right? Big pullback yesterday in the S&P. Obviously, it looks a lot bigger, when you looked at it in real time, and it was occurring yesterday, during this on the 30-minute chart, it looks pretty major. But when we look at it on a 4-hour and look at it in the grand scheme of things, it's really just a pullback to a key area here. Now, with that said, right now we're still in a long bias. The bias for the S&P is still to the upside, meaning we would expect it to continue to push on and move higher. Yesterday in the morning, I mentioned that we had cracked through an all-time high for the S&P during overnight trading. It reversed off of that. It's continued back. So the thing to watch here, if we break 3360, can stay above that, we could potentially see buying continue a bit higher. Right now, though, and it's still long. However, with that said, if we break down and we stay below this 3335, we break back down below this and close below it here, we could be looking at shorts, beginning to stack up and maybe see the beginning of a reversal on this S&P. So we'll see what happens. I mean, obviously no one has a crystal ball, but for right now, you know, as long as our biases stay in alignment here, you know, the 30-minute is above, you know, the 30-minute bias is technically long right now, and the 4-hour bias is long right now as well. So this would be, you know, continuing to give us, would be continuing to give us that that long trading opportunity. So a long trading opportunity would look like a break, you know, for trading a breakout, a break of 33.60, pullbacks down to this 33.40, 33.35, and you could play a bounce off of that. But do take note, if we break below here, that could be the beginning of a push lower. So, you know, if we break below here, you know, have your stops in place, and you know, potentially look at reversing long positions into maybe short positions, or just closing them out and waiting for the biases to line up, which might take a couple of days for the biases to line up into the short position. But anyway, that's it for right now over there on crude. Crude has, you know, is back into a long bias. The 4-hour bias is long, 30-minute bias is long. You know, yesterday we talked about, you know, breaking above, you know, certain levels over here, and it pushed up, but didn't stay up long enough and ended up selling off through the day. But we are still in a long bias here in crude, so, you know, we'd be looking to continue to look for buying opportunities. You know, we can look for, if you look at a 4-hour, the buy opportunity would be above 42.50. So, you know, if we can, you might look at setting up a buy breakout up here above 42.50. We could also watch for pullbacks right back to 42. 42 is just it's a big whole number, and, you know, could be a spot to buy off of if you're looking for that pullback. Of course, the other way to do it is to, you know, watch for you know, 30-minute to make the lower highs and lower lows, and then trail your stop, you know, trail your entry utilizing the previously closed candle. So a couple ways to go at it, but, you know, if you're looking at a long position, you want to trade that momentum, it would be a break above 42.50. If you're, you know, trading pullbacks, it'd be a pullback down to 42, right at 42, you know, to look for crude opportunities right there. Gold, man, gold's tough. You know, the 30-minute bias is short, 4-hour bias is still technically long, although we can see this big sell-off right here from all-time highs on gold, but it is still technically in a long bias until this closes, until our shorter term moving average closes below the longer term moving average. We're looking for something definitive, right? And that's the only way to have a quantifiable way of looking at that is having, you know, something that's black and white to say, if this crosses, that's my signal that the long has flipped over to a short. But for right now, we are still in a long bias on gold technically. So you know, we'll wait and see what happens there. So gold is a mixed bias between the 30-minute and the 4-hour. So we won't do anything with gold. So S&P, you know, careful with this, but, you know, watch for breakouts above 33.60. Look at pullbacks for going long down to 33.35. But do be aware, if we break below here, it could be a bit more of a fall here on the S&P. So keep that in mind. Crude, we mentioned breakouts above 42.50, or, you know, buy the pullback down to 42, right at 42, and then gold is mixed, so we're not going to do anything with gold. Over on the forex side of things, you know, just kind of looking at what the markets are doing this morning, coming into the new U.S. session, which will begin in 6 minutes. The forex session begins here in right at 6 minutes. So you know, kind of looking across and seeing what's out there, seeing where the potential opportunities lie. There's not a lot. Most of these have moved overnight. You know, well, over our night into the, you know, from the Australasian session into the London session. There's been, you know, quite a bit of movement on many of these, and if we scan through the currency pairings here, many or most of these have actually already moved the majority of what their average range typically is. The only one that hasn't up to this point, Euro CAD, which has been on the radar for a couple of days now. Euro CAD, you know, it's only moved 50 pips on an average of, well, 47 pips actually, on an average of anywhere from 90 to 100. So there's opportunity there on that euro CAD. It's not an opportunity when we look at the currency strength and look at these against one another, because they're trading right together. And again, as we mentioned before, when currencies are trading right together like this, we would expect to see a very small range with that currency pairing. What we need to wait for is divergence, where one of these begins to push lower while the other continues to push stronger. So once we get that divergence, that would allow us to take a trade on that euro CAD, but it may not happen. So you've got to be patient and wait to see. Do we get that actual divergence? It gives us an opportunity to trade that. But for most of the other currency pairings I'm looking at here, most have already moved. A majority of what their typical range would be. So that's just telling us, hey, when this new market session opens, we're not going to have a breakout trade because everything's already done what it's going to do. So we're just going to sit on our hands and not worry about forex this morning. So kind of a mixed up market, lots going on. I'm sure that there'll be lots of people in the news, as there were yesterday, pontificating about what the Democratic vice president selection means and what that's going to do for the election, and prognosticating as to what's going to happen. Pontificating, prognosticating. I don't know where my P words are today. Anyway, forecasting what they think is going to happen with the election and what that's going to do to the markets and yada yada yada. That's all great, as I've said before. We all have our opinions, and it's great to have our personal opinions, but when it comes down to trading, we need to have a plan. And our opinion is not a plan. That's how we end up holding on to things for too long, because we don't want to be proven wrong. And if we're trading from our emotion and trading from our opinion, it's more common for those other personal demons to creep up and to have those fears of being wrong and fears of missing out and fears of losing money and yada yada yada. All of those things creep up. So when we're trading from a place of emotion or trading from a place of opinion, and our trade moves against us, all of a sudden that means not only was our trade direction wrong, which is no big deal, but it's telling us our opinion might be wrong, and that's hard to accept psychologically, right? And now we hold on to trades and let them go against us further and further and further and further, because if we take that, we turn that unrealized loss into a realized loss and actually accept that loss, that means we're accepting that we were wrong. And as opposed to just having a trading method and having your entry being wrong, which is no big deal, subconsciously we take it at a much deeper level, which is why we don't trade from emotion, right? So anyway, I probably don't need to rehash that. I know I say it almost every day, but I feel like I need to say it every day because honestly, guys, at the end of the day, trading is pretty on itself is easy. The hard part of trading is all the emotional stuff that comes with it, and all the things that we do to sabotage ourselves subconsciously and emotionally when we're putting too much of ourselves into what's happening, which is why we want to focus on a process. So if we have a process, document the process, trade that process, whatever it is, just make sure you have a little bit of a mathematical advantage for your entry and your profit points. Everything else works out in the end. It may not, it's not going to turn you into a millionaire in 5 days or 5 weeks or 5 months, but we're playing the long game when we're trading. It's all about the long game. So keep that in mind. If you don't have a process, don't have a method, document it, document one. I've given you a lot of great ideas in past videos and even on the website that you can go to and get access to a way to create your trading plan, right? So have one, document it, trade it, stick to that. Have your opinions, have your ideas, but leave them at the door when you step into the markets and trade the process. All right. So anyway, that's it for now. If anything pops up today, we haven't had any trades recently that have met our trading criteria that we're using for one of the account challenges. If we have one of those pop up, I will let you know, and we'll get to that. Just big things right now is just don't overthink it. All right. So we'll let you go here, and we'll talk to you guys soon. Bye.